What's going on, guys? Welcome back to another video on the channel. Today I want to do an overall market update, technical analysis on the S&P 500 as well as the NASDAQ. I haven't done one of these videos in quite a while, and I felt like today is a good opportunity. There are some slightly concerning technical factors that I'm looking at on the S&P 500 that could lead to some more downside, and I figured I would provide this update today. Of course, economic news, unexpected events can totally invalidate technical analysis, but I think it is smart to stay updated with technicals, and in today's video, I hope to share what I'm looking at, and hopefully this helps you in your trading. So if you enjoyed today's video after watching it, make sure to press that like button, subscribe to the channel, and make sure to stay tuned to the pre-market live streams where we will update this analysis on a daily basis. All right, guys, so I want to go ahead and kick this video off with the S&P 500 futures, then we'll get into the SPY ETF. But if you look at the screen, this is the daily chart on the S&P 500 futures, and I don't even think I need to say anything for you to see what's very apparent here on the screen. Right in front of you, you can clearly see, I believe, a bear flag that is forming here on the daily chart. Over the last 2 to 3 weeks, we've been sort of chopping around, creating higher lows on the daily chart, but we've had a very, very tough top side level that we cannot get above around this 3,900 to 3,920 level. On the screen, daily chart, you can clearly see this. You can see how just about over the last 13 to 14 trading days that we have been stuck in this little 3,920 to 3,800 channel, but you can also notice that we are creating these higher lows on the daily chart. And this is very resemblant of a bear flag, right? If you follow technical analysis, if you trust technical analysis, if you trade at all with technical analysis, then I think a lot of people out there will signify this formation as a bear flag, which could potentially lead to more downside. Now, today we got ADP employment report as well as jobless claims, and both of the numbers that came out today definitely are bearish for the market. ADP employment jumped almost 100%. Jobless claims came in lower than expected, and these things are bearish for the market. At least they are against what the Federal Reserve is trying to do, which could lead to downside on the market. We had some comments from Bullard today, which were slightly bearish as well. So is this starting to set up to be more downside on the market? Is this bear flag here on the daily chart signifying some more potential downside? I wanted to share this today because this looks pretty resemblant of a bear flag, and all it takes here is one move under this uptrend, and I think we start to see some downside come in. I think the key level that we have to be watching here is 3,800. You can see here on the daily chart, we have that bull flag or that bear flag. I wanted to share that. If we go over to the hourly chart, we can see some type of a bottom that has formed here right around this 3,800 level. We can see that the market has defended this 3,800 level multiple times. So if we get that bear flag breakdown here on the daily, on the hourly, whatever time frame you're looking at it, it will require, in my opinion, for us to drop 3,800 for that further downside to come in. But if I look at this daily chart, if I even look at the 4-hour chart, this is definitely looking bear flag-like to me. And if we get the breakdown of this uptrend, I could definitely see some of that downside come in. Now, the reason why I am definitely biased here to the downside is because if you look at the attempts to push higher here on the market, they have always been rejected, right? So this attempt back up to this previous low around 3,920 was harshly rejected. We had another attempt here, rejected. We had another attempt back here, and we rejected it once again. So every attempt to push higher here above this key 3,920 level has been very harshly rejected. And if we continue to see these rejections step in, I think it's only a matter of time before we have to make that new leg lower, which could come out of this bear flag breakdown. Now, if we zoom out here a little bit further on the 4-hour chart, if we do get this bear flag and if we do break out of that bear flag, I think your next target is probably going to be these lows, right? 3,650, 3,600, right in that general area. Do we need to retest these lows from back in June and July and back in October on the S&P 500? If we get that bear flag to break down right here, I would assume we start to creep our way back down towards these lows, somewhere back into this 37 to 3,600 range. Now, up on the screen, you will see the economic data that is coming out tomorrow. We have non-farm payrolls, unemployment rate, average hourly earnings. We have labor force participation. So we have a lot more job data that will be coming out tomorrow. If that is bearish, once again, is this the catalyst? Is the news the catalyst tomorrow to get us through this bear flag? It could definitely be setting coming up, and I think it is something to be paying attention into tomorrow. So jumping back onto the daily chart, guys, I think that is where this is definitely the clearest. If I go back to this daily chart, I'm believing you're looking at a bear flag here on the daily chart. You slip that uptrend, I think you're coming back down to retest that 3650, 3700 level. If the data tomorrow is the catalyst to help it through that uptrend for this downside to start coming in, then I think tomorrow could be a day where you start to see that crack come in. Now, again, we will have to break 3,800 on the S&P 500 futures for the continuation to come in as well. Now, here is the S&P 500 ETF, and you can see how this analysis is pretty much identical, right? We can see the same bear flag on the daily chart. We can see how we're sort of suspended here underneath that 390 level on the SPY. We're sort of holding up over the last few weeks, and if we get that bear flag breakdown, I'm looking at around this 360 level as your next test. Of course, everything will have to line up, right? The technicals will have to stand up. The economic news will have to be bearish for this to work. But if it does, I just wanted to point this out because if we do get that breakdown, if we do get that bear flag flush, then I think it could get quite aggressive, and you definitely do have some downside targets to make some money here on the downside if everything aligns that I'm talking about today. So I quickly wanted to pop over to the NASDAQ and give you a little bit of insight as to where the NASDAQ is trading versus the S&P 500. And when we look at this chart on the daily, we can see we are already trading at those October lows, right? With the S&P 500, if we break that bear flag, I think our target is the October lows. We're not quite there yet. But when we look at the NASDAQ, we are already at that level. So the question is, does the NASDAQ break to new lows if that S&P 500 breaks down? Or does the S&P 500 get held up because the NASDAQ is holding this October low? That's something we're going to have to watch out for. I'm going to lean towards that the NASDAQ makes new lows. If economic data is negative, if that S&P 500 bear flag works out, then I would assume that the NASDAQ slips to new lows here, which could definitely emphasize the downside. If you're getting that bear flag breakdown and the breaks of new lows here on the NASDAQ, it could all be a little perfect recipe for some more downside here on the market. But heading back over to the S&P 500, guys, I just want to preface this video, right? Technical analysis is something that we can look at the charts, we can share our analysis, we can share what we're looking at, but it is not a 100% truth. I like the bear flag here. I think it's definitely apparent. I like the fact that the S&P 500 has not been able to get over 3920, and I think the data that came out today is on the bearish side. Of course, tomorrow's economic data could go against our analysis here, and we have to be aware of that. As a trader, we can't come into any day with a complete bias. We can have an idea, we can have a game plan, but we can't come in with a bias. If the data tomorrow shoots the market higher, if the S&P 500 holds this uptrend, then the bear flag may not work out. But I want to make sure that if you're watching this video, you are prepared for this. I don't want to see anyone get surprised by a substantial downside move here if this S&P 500 breaks this bear flag and starts to trade back down towards that 3650 level. So guys, that's just about all that I have for you in today's video. I just wanted to share this overall market update, this technical analysis that I think is quite important heading into tomorrow and next week. I am still getting used to this new setup that I have here. So if the videos are a little bit different than they were previously, I apologize for that. I'm going to continue to work on the setup, make it so that it's the best possible content for you guys to have and for you guys to watch. Once again, guys, thank you for watching the video. If you agree with the analysis, make sure to drop it down below. If you disagree with the analysis, let me know below as well. I want my YouTube channel to be very open forum, so if you guys have an opinion on the analysis, feel free to drop it below. We can only improve together. We can only improve by sharing our analysis, and I hope my analysis today helps. Once again, guys, thank you for watching. Press that like button, and I hope to see you in the next one. Peace.